Welcome to the MoneyShow.com video network. My guest today is Noble Dracone. Welcome, Noble.
Thank you. I'm glad to be here.
Well, you've trained and taught lots of traders over the years, and I'm anxious to hear are there a few traits or attributes they need to have to be successful at trading?
Yeah, there's a lot of things that people think you need to have in trading, but there's really just a few core ones. You have to have strong money management, you have to have strong risk management, you have to have good technical analysis skills in order to trade these markets, and that's really the key of it.
Okay, and some new traders probably are good at technical analysis or risk management, but they make a mistake in the third category. How do they get it? How do they get the right skills?
You know what? When I started off in this business, everyone that I talked to was all about technical analysis. They were real focused on whether it's Bollinger Bands or whether it's using pennants and flags and double tops. So all the focus was on how to get into the market. So I think everyone is pretty good with technical analysis, but unfortunately that's 90% of their energy being spent. And as we all know in Pareto's principle, 80% of success comes from 20%. And I think a lot of people leave out the money management and the risk management, and that's really where they make their money.
Huh. And so what do you find? Do you find they don't limit their risk enough, or that they get in a position they don't manage it well?
Well, most people don't really understand what money management is. The fact that the money that they're bringing to the market is only a finite amount means that there's an opportunity for them to get into the markets and then get themselves into trouble. So when you bring in the amount of whatever it's 5,000, 10,000, you should trade to your amount. But unfortunately, there's a lot of systems out there that let people demo trade 50,000, 100,000, and it gives them bad habits. So the first part of the money of it is money management. You got to manage the capital you have and trade to what you have. And so a lot of people forget that, and they end up getting in over their heads quickly, and then they blame the markets instead of their own strategies and style.
So you mean they take too large a position for what their capital is they have to trade?
Yeah, and it's easy to do in this market. There's a lot of leverage, there's a lot of fast-moving markets, there's a lot of opportunity, and it gets easy to get frustrated. And you have to really have a set of rules that you deal with your money. And there's a lot of people who don't know that they can buy T-bonds to earn interest while they're trading. And you and I both know, you've been in the market a long time. There's three ways the market can go: up, down, or sideways. Well, sometimes having no position is a way to manage your money, and people don't do that often enough.
Yeah, I always thought that overtrading is one that gets too many people. Being out is sometimes the best thing that you can do.
And it's easy to overtrade because everyone's talking about being a day trader and being aggressive. And the reality is most of the trades that I've been successful on are ones that I've been able to hold on for 7, 10 days, week. It didn't really matter because with smart money management, I was in a trade that I could afford to be in. And then using solid risk management techniques, I was able to protect myself.
All right, and using some of the synthetics, using the options and the methods you use, even with today's volatility, that those longer time frames you weren't worried by, that probably didn't affect you.
No, because like I said, if you have solid money management and you're investing the amount of capital that you need, and you've got good technical tools that get you into the market and more importantly show you how to get out, then your risk management comes in and protects your capital. And so you will be wrong. That's the number one rule about the markets. You will be wrong, whether you have not enough contracts on a successful trade, or whether you get out too early, or whether you were just wrong on the trade itself. So you have to have the risk management tools to protect you and to preserve your principal. And the only way you do that is having options, is what I always recommend, or playing synthetics, or at least being long and short at the same time.
Great. Good advice, Noble. Thank you very much.
Thank you.
And thank you for watching us on the MoneyShow.com video network.